Next up, we have QBI. Acronyms can be tricky, so Brad, please explain what QBI is to the layman. It's not as quite specific as standard deductions.
Yeah, so it I guess you could kind of say it's similar in a way. Maybe we could say it's a standard deduction for business income. So what QBI is, it's qualified business income, the QBI deduction, qualified business income deduction. And again, the simplest way to say this is it's just a percentage of your business income that you don't have to pay tax on. And so if I were to break it down, there's phase outs, there's limitations, there's qualifications, there's all those things. But to break it down in its simplest form, basically 20% of your net business income is not subject to income tax. So if you think about this, if you've got a professional who has W-2 income of $200,000, and then you've got a self-employed person who has income of $200,000 net business income. Now they had to generate much more much more revenue minus their business expenses and everything to get there. But if you take those two, the W-2 gets no other deduction, but the self-employed, the business owner, gets 20% right off the top and can deduct $40,000. So again, there's income limits here. There's specified service trader businesses where if your income goes above a certain amount, you lose out on this completely, which is most of your professional, accountants, financial advisors, stuff like that, attorneys, lose out on this when it goes above there. But what the bill did was we were losing this. And this was going to be a huge hit to small business owners. Anyone making income, self-employed, S corporation, running their own business from, $10,000 side hustle all the way up to $200,000, $300,000 of income from their business was going to lose this 20% deduction. And what the bill did was it kept it in place. So this is another one of those situations where are you going to feel like this bill really did a lot for you? And this is maybe where, again, a little bit of that B grade comes in, is because it didn't do anything amazing, but it kept something that's pretty cool, right? So it kept something that we're benefiting from significantly and that was going to hurt. This was going to hurt if it had expired, and it was going to at the end of 2025. So really, the 2026 tax year, when you were filing that return in 2027, that's when you were going to feel this, and you were going to pay significantly more in taxes if you own your business and you're qualifying for this QBI deduction. So kept it at 20%, kept it in place. Another thing that it did was there's some phase out ranges, as I mentioned. And it's okay, if your income goes above a certain amount, then you start to phase out the benefits of this, and it increased the amount of income over which this phase out occurs. So it just basically means that the QBI deduction is going to phase out a little bit slower. So some of those folks in the higher income would get a little bit more benefit from this than they have in the past, potentially, if they're in that phase out range. And we have this is maybe, I don't know, Andrew, you can throw in your opinion here. This to me is a political talking point where we have this new minimum $400 QBI deduction, but you have to have at least $1,000 of eligible QBI active trader business activities to get this. So if we think about this, you have to have at least $1,000 of net business income. Well, the QBI deduction on that would have been $200. And they're now saying that you get a minimum of $400. So, okay, those folks just got an extra $200 deduction. They're probably, let's just say they're in the 22% tax bracket. Would that just save them $45 in taxes? So, was this, is this,
Yay!
this, something you're going to be talking about to get votes, but it really didn't help anyone. And if you don't understand your taxes, like the majority of Americans, they're going to be like, yeah, I got this great new deduction. And yeah, I mean, it's a meal at Chick-fil-A with your family, like,
Yeah, well, a lot of that comes down to is that people don't understand what deductions actually mean. Like a lot of this means like you're not actually, we're gonna talk this more with the child tax credit as well, but like you're not actually getting money, right? They're not
Right.
sending you a check. You're just gonna owe them a fraction less in
That's
money.
right.
You're paying less. And Brad, to your point too, like it stays the same. It's like, yeah, it doesn't technically help you, doesn't make anything better, but not hurting is a funny way of saying I'm helping you.
Yeah.
Well, I'm helping you by not punching you in the face.
Right.
But I'm
Yeah.
not gonna like give you a band-aid for that cut on your forehead. So it is a funny way of saying it. And this was specifically for small businesses. So what would it have gone up to if not staying up to 20%? Do you know off the top of your head? I kind of threw that at you out of nowhere.
So QBI deduction in the House bill, they were going to increase the QBI deduction to 23%. Senate kept it at 20%. If the bill hadn't passed, we would have lost this deduction completely. So again, if let's say
So
you've got a net,
we would have owed 20% more in taxes as business owners.
but you would have had to pay tax on 20% more of your income.
Income.
So if you
Right.
had net business income of $100,000, you get a $20,000 deduction for QBI, so you're only paying tax on 80,000. You would have had
Yeah.
to go back to paying tax on the full
On the
100.
full 100.
Yeah.
Oof. Oof. So when you put it like that, it's like, yeah, well, yeah, you didn't help me, but you didn't screw me either. So
Yeah.
I guess that's
Yeah,
important.
you helped me 8 years ago, and then you prevented undoing the help that you did 8 years ago. Yeah.
Yeah.
Mm.
So again, it's a lot of optics. Andrew, any response to what Brad said earlier? I know you want to throw it to you, and I kind of interjected a little bit.
Yeah, I think that the $400 thing, it's like, okay, whatever. Like that thanks, but no thanks. And I think the where I see it is how many people I work with don't even know that deduction exists.
Yeah.
They're either doing TurboTax and or they're paying a preparer to do their tax returns, and they have no idea, what that is. I mean, this is people with real estate that have no idea about it and how that qualifies, and then the self-employed folks or who have side gigs, that they're doing. So I think QBI, like Brad said, it's a nice thing. I mean, I'm a business owner. Unfortunately, I'm phased out for it because of my job. We didn't have enough lobbyists and financial advisory services to get no income cap. So as a
Yeah, like
specified,
the engineers and architects, right? It's like they got left out of the specified
yeah,
service
the
trade
home
business.
builders, the architects making tons of money, get it. So, again, a lot of people who should have a QBI, doctors, dentists, oral surgeons, attorneys, that are making $1 million a year, they've never had it. So to them, they could care less. But there are a lot of self-employed people where, like Brad mentioned, that extra 20% of a net business income deduction. I mean, it helps. I think it's a good thing. And my philosophy with clients when they learn about it, or I'm like, hey, this is why this is important. They do see it as like, okay, yes, I am offsetting some income that now that money's not going to taxes. I could use it for other stuff in my business, in my investing, etc. So I think QBI is a good thing. I just wish that the income limits would be more advantageous, but I have a little bit of bias in the field I'm in. Brad, you do too.
Oh yeah, absolutely. Yeah. And I mean, this is one of those things too. I mean, as you said it, right? It's like, okay, so the small business owner, and when I say small business, I'm saying, 100,000 to 400,000 in net business income, which is a great life, right? That's a great living. And there's a ton of small business owners in that space. And what this did was I'm just thankful that it prevented me from having a ton of conversations next year about why did my taxes just go up significantly. So, again, it's not going to be this amazing. My taxes just went down, but they prevented me from having a ton of conversations about, well, here's why you owe a ton more in taxes. Now, the other piece of this is, I'm using small business just in terms of kind of a general term. But when you look at the definition of small business for some parts of the tax code, they've increased that. Like if, okay, cash versus accrual based accounting. Well, small businesses for that purposes and small businesses for the gross receipts test for this new R&D expensing is $31 million. So, hey, how come we can't get a QBI up to 31 million, right? Like, I think Andrew would be okay with that, like, I don't think
Yeah.
you're over that yet, right? So let's get a small business definition in the QBI section that gets to, 20, 30 million. That'd be nice.
Mhm. For sure. I put a stamp of approval.
Yeah. Let's use the same definition for the same terms across all of the tax code. Hey, that would be a great way to improve the tax code instead of defining the same terms different ways in different tax code sections.
Well, but Brad, the government defines income by using the word income.
Yeah.
That's the
Yeah.
definition of clarity, right? I mean,
Yeah.
clarity is gonna be another constant theme through this too. Like it provides more clarity, but at times it's like, but you didn't. Sometimes you
Mhm.
do, sometimes you don't. It really is kind of picky choosy. But so a lot of this comes down to taxable incomes, right? Meaning the threshold. Andrew, you said you were a little over that threshold, which in of itself, it's a good thing, right? So, but how can you also help clients lower their taxable income to meet these thresholds, because sometimes it is kind of this moving money around, doing this, that, and the other, or having expenses. So walk us through that, like what options there are to still kind of meet those thresholds and incomes.
So the biggest thing I tell people is the limited options for your what you call top line deductions. So lowering the AGI, which so much of tax rule and benefits are based on. Biggest benefits, retirement accounts, tax deductible
Mm.
retirement accounts. So for the self-employed, the business owners, these are solo 401ks, SEP IRAs, which are employer-based contributions, simple IRAs. You can even go into cash balance plans, things like that. So oftentimes for a lot of business owners I'm working with, we're looking like, hey, are you close to that 400 number? If you're married filing jointly, like maybe we need to do a SEP IRA that can get you to 380 or whatever it is. Those are the biggest ones. And one thing I know we're going to cover later today too is some of the 100% depreciation, bonus depreciation that's now going to be available again. So if it's equipment related to their business, property, things like that, that again can be a big one-time expense to get them below 400, all the better. So I run a lot of those scenarios for clients of, hey, what's the best thing for them? But you always have to equate two things when it comes to lowering your income. One is generally going to be an expense. So, for example, buying an equipment like, man, I wrote off a $500,000 combine tractor. It's like, yeah, but you spent $500,000 on a tractor to save $100,000. And
Yeah,
then the
spend
thing,
money to save money, man. I will live that way till I die.
yeah, and people jump to that in a heartbeat and think they're gaming the system in a way. And it's like,
Yeah.
well, you're not really. But then also, from me being a retirement income planner, folks who are so motivated on deducting income, we've got to lower income today. We got to lower income. Don't realize the tax bomb they're creating in the future. Like you're not getting rid of it. You're just delaying the potential taxes. And maybe taxes are lower then, maybe they're the same. Maybe taxes are higher. Nobody can predict it, and a lot of people have opinions on it. But I tell people that I'm like, okay, sure, we put $70,000 in a SEP IRA today. You save 16,000 in taxes, and they're like, "Woo, this is awesome." But they're probably going to be the client that I work with now that's 62, and they're like, "Oh no, I've got $4 million in account that's taxable. What do I do to avoid that?" So that's the tricky part with lowering that income, or you just make less money, and people don't want to live with that advice either.
Yeah, nobody goes for that one. I've tried that one a few times
Yeah,
too, make less money, and no one goes for that one. They don't want to pay less tax that way.
that's right.
So,
Yeah, they
but
look at
Andrew,
you.
you just gave me all the boring stuff. Like where are the secrets that the rich people use, Andrew?
I know, yeah, you've
I'm
got
still
all the
looking for them
fancy
myself.
stuff and the bad advice, oh yeah, buy art at a discount and then gift it to a university, at its real value that an appraiser can do, and you can deduct all this money from your active income. And yeah, there's a lot of the term tax strategist that's popped up, and anytime I hear this, I just naturally get that like cringe feeling of like, ooh, yeah, maybe you can do this, but the audit that comes, and Brad, you could speak to that, just ooh, makes me a little
Yeah, I would
nervous.
I would say most of these strategies that people are promoting as secrets that the tax use, they're actually uh, secrets that convicts use, and they're in prison right now for trying to do tax evasion.
That's right. Yeah. I had four clients who did the same thing. Well, how are they doing? I have no idea. They've been locked up for a few years,
Yeah,
but
yeah. It's
yeah.
there's a reason why they were keeping it secret. It was because it was illegal. That's why it was a secret.
That's right.
Gotta love it. Got to love it. So yeah, Andrew, I'm gonna write that down. Spending money will not save you money in taxes.
That's right.
That sounds about right.